Assalamualaikum. So, good morning, everyone. So, for this session, I will be discussing the missed questions in the first summative exam. So, only those missed questions. If there's one of you who didn't get it correctly, I included the discussion here. But most of the time, konti lang naman yung isa lang or dalawa. So, na-overlook lang siguro. Okay? So, the following discussion are the answers and discussions to the missed questions, to the questions that one of you got it na-overlook lang. So, please refer to the discussions. So, the first step in determining the classification of joint arrangements is to assess whether the arrangement is structured through a separate vehicle. So, what is this separate vehicle? A separate vehicle is a separately identifiable financial structure, including separate legal entities or entities recognized by statute, regardless of whether those entities have a legal personality. So, example na lang dito are partnerships and the like. So when an arrangement is not structured through a separate vehicle, it is a joint operation. So our answer is joint operation. So this is because in these cases, the parties determine in the contractual arrangements their rights to the assets and their obligations for the liabilities. So these are classified as joint operations, just like in mining joint operations. Okay. Okay, so our next problem is auction. So only one got this problem correctly. Okay, so our first step in solving this is to compute for any over or under allowance, no, so that we can adjust the selling price, and that is very important because the adjusted selling price will be now the basis for our computation of our gross profit rate. Okay, so our over allowance can be determined by comparing simply the trade-in value versus the actual value. So yung trade-in value given sa problem, that is a trade-in value of 30,000. Okay, so we have 30,000. And we have compared it with our actual value natin of we have the estimated selling price, 25,000 daw, can be resold for 25,000 less the reconditioning cost of 1,250 and the 15% gross profit. Okay, so our 15% gross profit, 15 times 25% is 1,250. Okay, so is 3,750. So that's 15% gross profit plus the reconditioning cost. So we have 5,000. So our actual value lang talaga is 20,000, no? Okay, so the actual value of that used equipment is only 20,000. Kasi syempre, mag-recondition pa tayo at saka ibabawas pa natin dyan yung gross profit natin. So, yung real value na lang niya talaga is 20,000. So, we now have the over allowance of 10,000. Okay? So, over allowance of 10,000. So, again, be it reminded, yung sinabi ko kanina, i-deduct natin ito, no? This will be as a deduction, no? From our selling price of our new equipment. Okay, so yung selling equipment natin, the selling price is 85,000. So, therefore, kung may over allowance, ima-minus natin, magiging 75,000 na lang. That is very important kasi ma-determine natin dyan yung gross profit rate later. So, yung RGP natin can be computed by the collections multiply lang by the gross profit, no? So, again, simply, the realized gross profit is simply collections multiplied by our gross profit rate. Okay, so, yung question is, ano yung collections natin? Dalawa yung collections natin dito. First is the down payment. The down payment natin we've paid 5,000, and of course, the actual value of our trade-in at 20,000. So, our down payment actually is 25,000. Okay? Installment natin. Magkano ba yung installment natin? So, the selling price is 85. May trade-in value na 30. So, may 55. Nag-down payment pa tayo ng cash na 5. So, ibig sabihin may balance tayo na 50,000. That will be paid in 10 monthly installments. So, 50 divided by 10, we have 5,000. Okay, so 5,000 times 3 months, we have collection from installments of 15,000. So all in all, we have 40,000 collections multiplied by the gross profit rate. So paano natin kukunin yung gross profit rate? Okay, so again, that is simply 15 divided by 75. Ma'am, paano natin kinuha si 15? Okay, so 75,000 yung adjusted selling price. Right? Yung kinompute natin kanina, 85 minus 10. So, i-minus mo lang yung unit cost ng company na 60,000. So, we have a gross profit of 15,000. So, gross profit rate is simply gross profit 15,000 divided by the adjusted selling price 75,000. We get 20%. So, 40,000 times 20%, our answer is 8,000. Okay, so we have realized gross profit of 8,000 pesos. Okay, so our next problem is still on installment sales. Okay, on January 2, 2020 daw, B sold a used machine to W for 900,000. May gain na 270,000. So this is our profit or gain, 270,000. So we will remember that and this detail 100,000 for the computation of our gross profit rate later. Okay, so actually we can compute now 270 divided by 900. So our gross profit rate is at 30%. Okay, so next. The question is, what amount of deferred gross profit should be reported December 31, 2021? Okay, so if there is a deferred gross profit here of 270,000, yung tinatanong is on 2021, ibig sabihin, nabawasan na itong 270,000 of the realized gross profit on the year of up to the year of December 31, 2021. So, kung ano yung nag-gain na realize na natin dyan, ibabawas natin dito sa 270,000. So, therefore, yung remaining, yung tinatanong dito. Okay? So, we have our deferred gross profit of 270,000. Ibawas lang natin si realized gross profit. Okay? Because DGP is actually our liability, and the moment we realize the gross profit, we recognize revenue. So, therefore, mababawasan yung DGP natin. Okay? So, our realized gross profit is coming from our down payment and from our installment collections. So, our down payment here, we have a down payment here of 150,000 cash. Okay? Check. And we have the installment collections on the principal, not including the interest. Okay? So, may siyang 750 divided by 3 annual installments. So, meron siyang 250 annual installments. So, nagbayad daw on January 2021 ng 325 including the interest. So, i-exclude lang natin si interest pertaining to the principal. We have 250,000. So, therefore, our total collections is 400,000. So, we simply multiply that with 30%. We get 120,000. Okay. So, 120,000 revenue na natin ito siya. So, ibabawas natin ito siya sa DGP natin. So, therefore, 270 less 120,000. We have our remaining DGP, which is our liability of 150,000. So, 150,000 will be our answer. Our next question. In accounting for a long-term construction type contract, the two peculiar accounts used are progress billings and construction in progress accounts. As of year-end, but prior to the completion of a long-term contract, how should the balance of these two accounts be shown? So, yung CIP or construction in progress account is composed of the cost incurred to date and the profit realized to date. Okay, so this account is oftentimes deducted, netted, offsetted with a balance of progress billings to date para makuha yung due from or due to customer balance. This is also called the construction in progress net of progress billings. Okay, so the presentation according to IS 1142 The gross amount due from customers for contract work should be shown as an asset or as a current asset. And if it is due to customers, it should be shown as a liability. So for all the choices, only this choice, net as a current asset if debit balance, and current liability if credit balance. So this is our correct answer. So billings on uncompleted contracts in excess of related costs in most cases is shown as a current liability. So it's a current liability, no? So it's actually the billing. So yung mga nakolect natin is more than our construction in progress account. So that is a current liability. Okay, so our cost of uncompleted contracts in excess of related billings. So, mas malaki pa yung nagasto natin kaysa nakuha natin na billings from customer. Okay, so that will be our receivable, current assets here. Okay, so due from, may due from customers tayo. Kasi nasobrahan na yung cost natin kaysa sa nabayad ng customers. Receivables. Okay, so another question. For Best Delight, the amount of revenue from training and franchise on July 1, 2020 is equal to. Okay, so for the first question, the amount of revenue from training and franchise on April 1, the answer is 0. Everybody get it correctly. Okay, bakit? Kasi on April 1, wala pang substantial services na na-render si franchisor. So, our revenue is 0. Okay, but for July 1, ano yung franchise revenue and training natin? So, the correct answer is 66,402. So, yung iba, hindi i-plus yung dalawa. Okay, so, i-consider din natin as revenue yung service revenue on the training. Okay, so you add 2,000 from 64,402, yung nakuha natin na franchise revenue, that makes it 66,402. Okay, so our next problem is joint venture pa rin. Okay, so our answer here is net gain of 18,550. So actually everyone got it correctly, but maybe na-overlook lang ng isa, hindi nalagyan or na-leave blank lang, no? But for clarity purpose, I just included here the answer, no? So it's 18,550. So the transaction cost, so we have the 37,000, right? Okay, multiplied here, the 37,000 multiplied by the 5%, okay? The transaction cost, so that's 1,850. The dividend income, 24,000 of dividends, okay? Declared and paid dividends, 24,000 times 35% the equity. So we get 8,400. And the gain on FVR, okay? So we have here the gain. So we have 49,000, the fair value, okay? So 49,000 less the 37,000. So we have 12,000. So our net gain is 18,550. So okay, so for the next question, it's all about on partnership. Okay, so the question is the net adjustments to capital in the books of YY is, okay, so for XX, for the previous question, every one of you got it correctly, though one answered only 5,000, but 5,000 I did not accept that because it should be 5,000 net credit. Okay, so for our answer, it will be net debit of 7,000. How did we get 7,000? Okay, so for YY, for the for first detail A, we have here the inventory is 22,000 for YY. So inventory 22,000 versus 24,000, there's a net decrease in the asset, and that is a net debit to capital of 2,000. For letter B, that is 1,000 accounts receivable will be uncollectible. So again, a decrease in assets. So that's a debit to capital of YY 1,000. For letter C, accrued salaries is 5,000. So that's another liability. So that's a net debit of 5,000. For letter D, ito yung medyo trick. Unused office supplies of XX is 5,000. So for XX, no problem. Just add 5,000 because that's an asset. While that of YY amounted to 1,500. So ibig sabihin, itong 5,000, yung unused dito is only 1,500. So ibig sabihin, the expense or the used office supplies is amounted to 3,500. So that will be a net decrease in the asset, therefore a net debit to capital. So net debit to capital of 3,500. And then we have for letter E, the prepaid rent of 4,500. So there's an increase in the assets, so that's a credit to capital. So 4,500. So we have there 215. Okay, so i-calculate lang natin. So 1,000, 5,000, and 3,500 less 4,500. So we have a 7,000 net debit. Okay. Okay, so for our next question, what is the additional investment or withdrawal made by XX? Okay, so be reminded that in detail F, XX is to invest or withdraw cash necessary to have a 40% interest in the firm. Okay, so we will go back to our previous question that we answered. So the unadjusted capital balances are already given. 72,000 for X, 100,000 for Y. So we have the net adjustments, 5,000 net credit. So the adjusted capital of XX is 77,000. Everyone got it correctly. For YY, the adjusted is 100,000. The net debit of 7,000. So we have the adjusted capital of 93,000. Another important detail. The firm is to take over business assets and assume liabilities, and capitals are to be based on net assets transferred after the following adjustments. So based down on the net assets transferred after the adjustments. So therefore based on the adjusted capital. Here in the detail F, XX is to invest or withdraw cash necessary to have a 40% interest in the firm. So 40%. So, ibig sabihin, kay XX, 40%, kay YY, 60%. Now, the question is, ano yung basis? Okay. So, the basis is not the 150,000, but rather, we will compute what is the 100% if YY is to invest the 93%, giving him 60% interest. So, 93,000 divided by 60%, we will get 155,000. Okay, so let me repeat. 93,000 divided by 60% interest. The agreed capital is actually 155,000 because there is no detail in the problem that YY will withdraw assets. So, ibig sabihin, si YY yung basis, no? Okay, so 155,000 times 40%, we have 62,000. So therefore, 77 contributed and agreed is 62. So magwi-withdraw si X ng 15,000 to have a 40% interest. Okay, so our answer is additional withdrawal or withdrawal by XX of 15,000. Okay, so our next question is, how much is the total assets of the partnership after formation? So our correct answer is 212,000. So from the accounting equation, asset is equal to liability plus capital. So our capital, we have determined it already of 155,000. Okay, so our liabilities are totaling to 57,000, including the adjustments. Okay, So, yung nadagdag kasi dito is the accrued salaries, no? Accrued salaries of 4,000 and 5,000. Okay? So, capital plus liability, 155 plus 57 is equal to 212,000 pesos. So, as simple as that. Okay? So, may iba lang na overlook, no? Na overlook baka sa 150 nag-base. So again, the total capital of the partnership after formation, our correct answer is 155,000. So again, 77 from X, 93 from Y, and then the 155,000 pesos in total. Okay, so withdrawal by X of 15,000. So again, 155,000. So again, the capital balance of X in the combined statement of financial position is 62,000. So again, 62,000. So this is 40% interest of the total 155,000. And again, the capital balance of Y in the combined financial statement of financial position is 93,000. So no changes because there's no stipulation that he will make withdrawal or additional investments. So everything that he contributed, that will be the basis, 93,000. So all in all, that is our Afar first summative exam. So this is equivalent actually to your first pre-board. So very good. A great job, everyone. Well done. Okay, so we will continue on reviewing and more summative activities to come. Thank you.